Hello guys, welcome to the Trading Parrot. In this video, I'm going to introduce you to a new tool that is free. It's called QFL Optimiser. Working with bots in QFL can be challenging. You need to decide where to take profit. You need to decide whether you're going to use a stop loss, risk-reward ratio. And if your option is to go for a DCA bot, you need to decide where to place all your safety orders, how to distribute your volume, what's the max deviation that you want to cover. There's so many decisions to take, and not just about the bot, but also the deal start condition. So if you're using QFL, you need to decide between using the risky, which is the 1 hour, or maybe going for the more conservative, using a time frame of 4 hours, and then your percentage for the entry. With so many variables, without having any statistical information, how can you really decide what is best for your QFL bot setup? And here's where I build QFL Optimiser to help me fine-tune all those parameters to make sure that I'm not just blindly picking random numbers. Of course, you can use backtesters and start changing parameters until you get something that works best. But wouldn't it be better if we have all the statistics right in front of your eyes? How many times the bases got broken? What's the typical drawdown after a base gets broken? And how many bases have been broken and that the price has not yet managed to reach above it? In other words, that base is still not reconquered. All the statistic data definitely can help me deciding better parameters for my bot, at least when I'm doing a bot for a single specific asset that I want to trade at the time. Of course, if you want to go for a composite bot, you're going to have to find middle ground settings that work for many tokens. When it comes to fine-tune bot for a specific asset, I really haven't found much online, and that was precisely my motivation to come up with this idea of building a QFL optimizer. Guys, if this is the kind of content that you like to watch, make sure that you're subscribed to the channel, hit the notification bell, and do the 2 best things that you can do to help this channel grow. Watch the video until the very end and do not go anywhere without writing down, comment below. Thank you so much for that. All right, let's start with the basic. QFL Optimiser, where can you find it? You're gonna just type QFL Optimiser, and it's gonna be this one here that starts with TTP Optimiser by the Trading Parrot. Once you load it in the chart, you're gonna see something pretty much like this, some green lines, some bands below, there's gonna be this table. And the first thing that we need to decide is what time frame to use the chart and what parameters to use the QFL. For example, if you're going to trade on 3 commas with the more conservative version of QFL, you can use the 4-hour time frame. If you want to go for more deals of less quality, you can use the 1 hour, which corresponds to the most risky version of QFL. So let's say I'm going for the 4-hour. Since I'm going for the 4-hour, I have less constraints to decide which time frame I can use for the chart. I won't use the 4-hour, but I could use up to the 2-hour. I could go for the 5-minute, 1 minute, up until maximum 2 hours, I will say. And why am I doing that? Because I want to have, number 1, enough candles to measure all the statistics. And number 2, I want to have enough data back in the past to get more and more statistics. Of course, if I'm doing the statistics in the 1 minute, I'm gonna get barely a few days of data, which is not gonna be enough. But if I go for 1 hour and then I go back in time here, I'm gonna see what is the oldest candle, and that is 2021 January. So that's giving me over 2 years of data. So that's a lot of data already. We're going to start going little by little through all the details of everything that this indicator is offering. The first thing is this green line. This green line is the QFL band. It's the band that is used for taking longs. The way it's normally used is the price breaks below the base, and typically in 3 commas, by default, it comes with a 3 or 3.5%, meaning that if the price goes below 3 or 3.5% of the base, then you will be taking a long with the expectation that the price should go back at least a bit towards the base. In the best scenario, it should reconquer the base and go way above. By default, the indicator starts in the mode of percentile bands. The percentile bands are these ones that are plotted below the QFL base. In this table, we see a percentile, a drawdown, and a price. What this means is that out of all the bases in the past that got broken, meaning that the price went below the base, 10% of all those bases only reach a drawdown of 0.28%, meaning that if the base was like this, the price barely moved below the base. And that is within the lifetime of that base. As you can see, the bases are oftenly moved to a new price. If the price goes up, the base follows the price and a new base is created above. If the price goes down, a new base is created below. So for as long as this base was existing, 10% of all the bases, they only made it to 0.28% drawdown. The opposite is 100% of all the bases that were created by QFL, in this case the 4-hour version of QFL on Bitcoin, 100% of all the bases broken during the lifetime of that base, they did a drawdown of no more than 39%. And that's for Bitcoin. Of course, you can load a different asset and then find out what is the maximum drawdown below that base for that particular asset. Now, if we look at the different percentiles in between, you can find that 50% of all the bases broken in Bitcoin using QFL 4-hour have a maximum drawdown of 1.93%. So you're seeing here more or less a distribution in this table that is telling you how many of the bases broken and how low they can reach. So what are these bands that we are seeing here? These bands here are precisely these drawdowns shown in the actual chart at all times. But how can we interpret this? Well, very simple. For example, when you see the base broken, more recently today, the base broke at around 29.50 and then it reached a drawdown of around 1.42. So how does this compare with the previous times bases were broken? Well, if we find around here, we can see that that behavior corresponds to around 40 to 50% of all the other bases that got broken, because it's between 1.42%, so it's more or less between this value and this value. So we are doing a behavior that corresponds to 45% of all the bases broken, which means that it's very oftenly Bitcoin doing that. We can also interpret this in another way. We could say that 0% of the times the base gets broken more than 39%, and probably around 1% or less it reaches a drawdown within the lifetime of the same base of more than 36, 37%. So what if you wanted to find the drawdown that is only achieved by less than 2% of the deals? And that's where it comes handy, the second mode. You can use the twin percentile, and the twin percentile is going to use values from these two things. If you want a drawdown that is only reached 1% of the time, you could put a percentile of 99. You can see where that 99 percentile is located. It's at 20.4K on Bitcoin. That means that only 1% of all the bases that got broken within the same base broken, the price reaches that drawdown, 29.6. Conveniently, the percentile number 1, which I'm using 99%, in this table here is displayed, so you can see 29.5. The 50%, which is a second percentile, is the 1.9%. Additionally, you can see what is the average drawdown of bases broken, which is, in this case for Bitcoin, 4.0%. Don't get scared about these numbers. All these numbers are each individual base broken and how long it went below. So sometimes I wanted to see, how many times we reach something, and there's nothing more evident than just looking at the data. But okay, we have all this data, we have all the bands here, and we can very easily now say, okay, 10% of the bases reach there, 20% only there, 30, 40, 50, 60, 70 reach there, 80 reach there, 90 there, and 100% reach up until 17.7K in Bitcoin. That makes sense. But how can we use it for a bot? How do we translate all of this into a bot? That is the part that I'm still exploring, and I'm still work in progress finding better ways. And as I find better ways, I'm also complementing the tool, Before I tell you what I know about this optimizer and how I could potentially use it in the future, if you want to support the channel, I'm hosting this new event on OKX. You can unlock mystery boxes and win up to $10,000. For that, just head down to OKX, hit on sign up, expand the referral code and write down Parrot. With that, you're entitled to 20% discount in all fees lifetime. The more you deposit, the more you trade, the larger the mystery boxes you can win. So the things I'm focusing for now on the optimizer first are the drawdown, and secondly, to see these drawdowns here to try to target as much volume as I can. For example, if you're using QFL and you're using the 4-hour in this case, and you set the percent to 3%, which is kind of the default on 3 commas, you should probably know that of all the bases broken on the 4-hour, there is here a big percentage of those bases that they don't reach that 3%. So if what you're after is more deals, then you know that is not entering many times because that percentage doesn't get reached. On the other hand, if you're doing DCA and you're not covering the max drawdown from that base, which in this case is a 39% at least within the lifetime of the base, then you're probably not putting enough safety orders, at least if you want your bot to survive for a long time. My ultimate goal for this optimizer is to find where to put a take profit, a stop loss, and not to use DCA. I have to say that on that, I'm still a work in progress. It's been really tough to try to find what kind of pattern there is between all the statistics, all this data, and where to actually place them to get the best results. And because of that, today I'm going to show you how to do a DCA based on all these drawdowns. Let's enable ADB and the plugin QFL. So in this case, in the plugin QFL, I have it set to 3% 4-hour. We're going to be conservative. We're going to miss some trades. And I have the DCA settings with double safety order than base order, 10 safety orders with a deviation of 4, which is giving me cover deviation of 40%. Why 40%? Well, as we can see here in the optimizer, 40% should pretty much cover every single base. In the backtester, it's showing me that the max deal drawdown is 37%, and we're using up to the 10th safety order. We spent 25 days in a deal. So in principle, this bot is not making that much money, but is surviving the whole bear market and is managing to get out of trouble by itself. Many people will find this bot extremely boring, but many other people will appreciate the fact that they don't have to really care about doing anything. I'd be really interested to hear your opinion on how you think you could use this data to fine-tune your own bots. That's it for today. Thank you so much for watching. I will really appreciate that like and that comment down below. I'll see you on the next one. Take care. Bye-bye.